African time. Now, here's a story that we've been, throwing forward to for quite a while this afternoon. It's the International Monetary Fund. Well, they've completed their mission to Senegal, but without agreeing on a new lending program. This is after the West African country refused to restructure its debt, calling the move a disgrace. The international lender froze Senegal's previous $1.8 billion program last year. You will remember this after it was revealed that its new leaders did not disclose some of the hidden debts, which have since ballooned to more than $11 billion. For more on this, we joined on the line by Vince Musewe, an independent economist based in Zimbabwe. A very good afternoon to you, Vince. Good to have you with us on Africa in Business.
Hi, can you hear me? Because I can't hear you well.
Are you having problems hearing me?
Yeah, that's better. Just maybe, yeah.
Is this better? Okay, lovely. Well, let's start off with this, Vince. The Senegalese Prime Minister, Ousmane Sonko, has described the restructuring or the proposed restructuring of their state as, I quote, a disgrace. Why is Senegal reluctant to restructure its debt? And this is given the very high levels of debt that they have.
Yeah, okay. If you look at the history of IMF, I can start at the beginning. The IMF has been in Africa, lending Africa since 1952. It has poured in tens of billions of dollars into Africa. In 1990s, the IMF came up with what they called an economic structural adjustment program, where they basically intervened in African economies, asking to liberalize. And this led to serious deindustrialization and very high levels of unemployment. Actually, Zimbabwe suffered significantly from that policy.
Vince, I do apologize. I'm going to ask if we can just go to a break so we can try and get you on a better line. You're sounding very muffled, and this is indeed a very important conversation for us to have. So if you could please indulge us, sir, we'll be back with you in just a moment and hopefully on a better line. We'll continue that conversation on the dynamics between the IMF and Senegal with Vince Musewe, who's an independent economist based in Zimbabwe. It's gone exactly 20 minutes after 4.
Ready to connect, innovate, and be inspired? It's all happening at Africa's Tech Festival, where Africa's technology meets the world. From the 10th to the 13th of November in Cape Town, join global leaders, investors, and innovators driving the future of Africa's digital economy. Don't miss the continent's biggest week in tech. Get your pass now at africatechfestival.com.
The sound of Africa is evolving. Experience our new mobile app. Free to download, free to connect.
It is still 20 minutes after 4 p.m. Actually, it's just gone 21 minutes. Let's see if we've got a better line for Vince Musewe as we continue focusing on the dynamics between the IMF and Senegal. So, Vince, if we could please just start once again as to why it is that Senegal is reluctant and why they viewed this proposal to have their debt restructured, why they view this as a disgrace.
Yeah, okay. Every time the IMF actually intervenes, it's not only intervening at structural level. In Zimbabwe, they came and said, listen, there are various conditions in order to restructure this state. One of them is the compensating white farmers. The other issue is actually governance and economic reforms. So I would understand Senegal being hesitant because what the IMF does, because you owe them a lot of money, they basically come and prescribe your policies. Now, your economic policies, where you should be spending money. They look at how the country is being run, and they begin to actually interfere in the running of the country on the back of being owed money. Right? So it leads to some sort of, and I can understand Senegal, because once they do that, they are basically beholden to the IMF. And that has been the problem with a lot of African countries where the IMF has poured in tens of billions of dollars since 1952, but those countries are still underdeveloped in the state. The other issue that Senegal, which is probably they're scared of, is that once you are restructuring, you don't get access to international capital markets. because there is no more confidence to be lending you more money. It means that you are stuck when you need money offshore, as is in the case of Zimbabwe. So they're very hesitant to go the restructuring route because, number one, any debt you are taking out there will be more expensive, because the risk perception of the country increases because you're restructuring. And once that money becomes more expensive, there's a direct impact on the economy, because now you're borrowing heavily with heavy interest rates, right? And you still have to repay that, which means your revenues that you're getting as a country, most of them end up going to service the debt as opposed, for example, for public expenditure.
Does Senegal have any other options besides this formal restructuring? In other words, can they afford to dig their heels in?
Well, that is a big question, because currently, their debt is probably looking at 100% of GDP, which is huge. I think it's between 100 and 120% of GDP. Do you see what I'm saying? So it's huge. It's a huge responsibility. I doubt that they'll be able to afford to service this debt. What they can do is maybe don't go into full restructuring, but maybe just go into what they call reprofiling, where you look at the debt and you say, okay, how can we not restructure the debt, but, reprofile in the sense that, what are going to be the priorities to pay, and how are you going to pay them, and whatever. It is almost a mild form of restructuring. And I think that's the route they prefer instead of going to the full restructure. The issue of affordability is obviously out of the question, because there's probably more hidden debt, which is a lot of cases with African countries, in that the debt that is being disclosed is not the full debt. So it will mean the IMF has to go and quantify the full debt of the country. And some countries don't want to do that because there's a lot of hidden debt. For example, there's a lot of Chinese hidden debt that has not been accounted for. When China comes in and says, we'll build a bridge, but we'll give you a loan to build a bridge. And that loan is not taken into account when you're looking at the national debt. So there have to be transparency in actually quantifying the total loan. And some governments might not want that to happen.
Is there an existence of, and I guess I pretty much already know the answer to this, but I'd love to hear your thoughts on it, a public debt platform where all public debt is listed in order to try and avoid this quote-unquote hidden debt?
Yeah, you see, the issue has been corruption. Most governments, that are corrupt are doing some deals under the table, which something doing that list would actually expose a lot of dirt. And I don't think we are going to get there soon, because when technology is a powerful tool, but it requires accountability and transparency, right? And it basically means government has to open up its books to exactly what has been up to. And in a lot of instances where there's been corruption and where governments are not comfortable, with their popularity and stuff like that, they don't want that to be disclosed at all. So logically and theoretically, for you and me, we want to know how much the country owes in total, right? But politically, it might not be palatable.
For consumers and for businesses, there are the credit platforms like the ITC, etc., which do gather all the information and show one's credit profile. Surely a similar instrument for countries would stand them in good stead. But I wonder, Senegal says that they plan to finance 90% of a recovery plan from domestic resources, and they want to do this in order to avoid additional debt. How realistic is a commitment to rely mainly on domestic financing in the short to medium term for a country with debt as high as Senegal's?
Yeah, what happens in that case, you get what you're calling a crowding out effect, okay? Basically, the government goes out into the marketplace and issues paper, and basically sucks the money out of the economy in order to repay the debt. So they're crowding out the private sector, which then is unable to access that money for productive purposes. So the impact of that could be reduced economic growth and basically economic downturn, simply because local companies are no longer able to fund their working capital, which funds they were borrowing from the bank, which the funds are no longer there because the government has borrowed them in order to repay the debt. So those are the implications, and that will lead to other things. It can be inflationary. It can lead to, to economic decline, unemployment, and all those terrible things that we don't want to happen.
So how does Senegal's case compare with other African countries that have gone through these restructuring programs or have been in debt relief in the recent years?
Now, with Zambia, it seems to have successfully done that. We've got Chad, which is also restructured. You've got Kenya, you've got Ghana. Kenya might have to restructure. They have restructured yet. Ghana seems to be restructuring. But as I'm saying, you need to be comfortable with the amount of interference you're going to get, because effectively the IMF takes over. It says, listen, we're going to drive these things to make sure that you're able to repay this debt. Do you see what I'm saying? So the politics changes once you restructure, right? And then, you become beholden to IMF policy.
And I guess that's what every country is trying to avoid. You still want to maintain your autonomy, even though you may be heavily indebted. So there's clearly a difference there in priorities between the two countries. But I'm quite keen to find out what your thoughts are around issues of governance and transparency, given that the hidden or the previously undisclosed debts are said to have ballooned in the case of Senegal to the total figure over 11 billion now. What do you think are the measures that should be put in place in order to ensure transparency and to try and circumvent situations of this nature?
Yeah, it's bad news for the consumer, because let me tell you what, at the end of the day, it's the citizens who end up paying. It's the future generations who will end up with this debt. Okay, and the fact that the governments are not transparent with what exactly is owed is bad for the future of our children and bad for countries. Because imagine getting into government and only realizing you owe billions and you don't know what that money was spent for, but you owe billions. You'll be paying a lot of interest on that. It's bad news for anyone. That's why a lot of African governments are scared of the power transition. The politics becomes very authoritarian and dictatorial because they can't afford to get out of power, because once they do, a new government might come in and expose all these things. So it leads to further political oppression and basically people hugging power and staying in power in order to remain in control. And it's basically, when the IMF comes and say political reforms, economic reforms, it sounds good on paper, but practically, political reforms are one major area that African leaders are scared of. And we've seen what is happening in Tanzania. We've seen what's happening in Somalia. We've seen what's happening all over Africa. It's the political side that is on the mess. And as long as the politics is wrong, the economics suffer, because economics is basically about political allocation of resources and management of resources. So political reforms are key. But the issue, there's no appetite. There's no appetite for that, because it would obviously expose a lot of things.
And which is what was happening here in the case of Senegal and the IMF. We thank you very much, Vince Musewe, for your analysis this afternoon on this situation. You have yourself a splendid afternoon further.
Okay, thank you. Bye-bye.
Thank you. That's Vince Musewe, an independent economist based in Zimbabwe. He takes us to exactly 4:30 p.m. Central African time. Let's head over now to the markets desk for the latest market indicators. And this afternoon, we've got Chanduko Ligege.